In this video, I'm going to give you a complete overview of the NACA mortgage program. NACA advertises no down payment, no closing costs, no mortgage insurance, and no consideration of your credit score. So I'll be going over those bold claims and digging into the fine print so that you'll know the truth about this program and you'll know exactly what you need to do in order to start and finish the process with a mortgage and a house. So stay tuned for some great NACA information. My name is Art Smith and welcome to this channel where I like to educate borrowers on their financial options so that you could avoid predatory lending practices from institutions and/or individuals. So if you're looking for straight to the point, no BS financial information, do me a favor and subscribe to the channel. And if you feel like I'm doing my job by delivering useful and valuable information to you as the borrower, do me a favor and smash that like button so that YouTube knows that this is really good content and it can be shared and distributed to more people just like us. Now, a fun fact about NACA is that they coined the term predatory lending back in 1991, and their mission aligns with my mission, which is going to be protecting borrowers from evil, greedy individuals who like to take advantage of the less fortunate. So with great honor and humility, I'm going to do my best to deliver a video about the NACA program that gives you useful, up-to-date, and accurate information that could benefit you in your home buying journey. Now, before we jump into the qualifications and eligibility in the NACA program, I want to read to you NACA's mission statement because there's so much to dissect from this one paragraph alone. Now, NACA's membership of economic justice makes home ownership available with the best terms for members who otherwise would be prevented from obtaining an affordable mortgage. NACA is open to everyone, regardless of their income, providing they adhere NACA's eligibility requirements, policies, and procedures. NACA is the alternative to the many bad actors in real estate and mortgage industries who not only contribute to the destabilization of communities, but also exploit low to moderate income and minority individuals. NACA will work with you for as long as it takes for you to purchase a home, and NACA will continue to support you as a homeowner for as long as you have a NACA mortgage. Now, one very important detail within this mission statement is going to be NACA is open to everyone regardless of their income. So yes, NACA likes to focus on helping individuals who are in the low to moderate income threshold level. However, if you're making $50,000 a year or $500,000 a year, you still can apply for the NACA mortgage program. Now, there are two types of NACA members or clients. Number one is going to be priority members, which are going to be low to moderate income earners who earn equal to or less than the area median income. And this is going to be for your specific state and or county. And the second type of member is going to be non-priority members, which are going to be individuals who are earning greater than their area median income. So again, if your documented income is going to be below your area median income, then you're going to be bumped up to the front of the line when it comes to getting help and obtaining a mortgage with no down payment, no closing costs, no mortgage insurance. Or even if you're making greater than your area median income, then you still could qualify for the NACA program. However, you're just going to have to wait your turn in line in order to take advantage of this home loan program. Now, another key part of their mission statement is that NACA is the alternative to many bad actors in real estate and mortgage industries who not only contribute to the destabilization of communities, but also exploit low to moderate income minorities and individuals. Now, I love this part of their mission statement so much because this aligns with my principles, which is going to be each one teach one, and the only time that you should be looking down on somebody is when you're helping them up. And what happens to individuals who are part of the low to moderate income earning capacity or even minorities is that these individuals tend to get taken advantage of by real estate agents or even banks and lenders who are giving these individuals bad terms and bad interest rates and convincing them that these are going to be the only programs that they could qualify for. And by being a part of the NACA mortgage program, you're going to avoid predatory lending practices from banks and or lenders or buying overinflated houses from real estate agents and or brokers so that you don't have to be subject to just horrible real estate and mortgage practices by these quote unquote professionals. And that's going to lead to you defaulting on your mortgage and potentially even losing your home. So in order to be eligible for the NACA program, number one, no member of the household can have an ownership interest in any other property. Number two, members must occupy the home for as long as they have the NACA mortgage. And number three, member participation is going to be required in the NACA program for as long as you have a NACA mortgage. And number four, you must be a registered voter. And if you meet all of these eligibility requirements, then NACA will assist you in buying a home and will essentially give you a mortgage where you're not required to pay pay a down payment, and they'll pay most or all of your closing costs, no mortgage insurance, and a lower than normal market interest rate. Now, really quick, I want to touch up on the closing costs because this is going to be very valuable for individuals who are part of this program. Now, typically when you have a mortgage or you originate a mortgage or obtain a mortgage, you're going to have to pay origination fees, doc fees, title insurance fees, and other closing costs like escrow and or attorney fees, as well as appraisal fees, credit report fees, doc prep fees, doc recording fees, and there's just so many fees that are associated with a home loan. For example, if you find a home that costs $500,000 and you get approved for the NACA program and you're not going to be paying any down payment whatsoever, so that means that your loan amount is also going to be $500,000, then your estimated closing costs could be anywhere from $10,000 to $20,000. Now with the NACA program, you're not going to be paying any of these closing costs, or if you are going to be paying closing costs, it's going to be a fraction of what you would be paying for a conventional loan or an FHA loan. And that's going to be huge, and that's going to be the power of the NACA program, because they're going to be coming out of pocket for you on your behalf for your home ownership benefit. The only thing that you're going to be required to pay is going to be your portion of your homeowner's insurance policy and your property taxes. All other fees are going to be covered by NACA, and they're going to give you a lower than normal interest rate when it comes to your mortgage, and it's going to be fixed for up to 30 years. Now let's go over NACA's 10 steps to home ownership. Number one is going to be NACA's Home Buyers Workshop, and this could be taken or completed online. And step number two is going to be uploading your documents to their online portal for review. And step number three is going to be reviewing your NACA qualifications or being put into a program with a counselor to prepare you for qualification. Step number four is going to be Home Purchase Workshop, which is going to help you find your first home. Step number five is going to be reviewing the purchase and or sales contract, where you'll be making offers on your home until one gets accepted. Step number six is going to be conducting the home inspection after you get an offer accepted. And step number seven is going to be credit access and bank application. Again, they're not going to be using your credit score to determine your qualifications for this program, but they are going to be reviewing your credit report to make sure that you have no late payments in the past 12 to 24 months and that all other credit qualifications are met for this program. Step number eight is going to be processing your loan and underwriting your loan so that it goes all the way to the closing table, which brings us to step number nine, which is going to be closing on your new home. Congratulations. At this step, you are going to be a new homeowner. And step number 10 is going to be the post-purchase counseling and preparation for home ownership to make sure that you're not going to be defaulting on your mortgage and that you maintain this asset for as long as you're in the NACA program. Now let's talk about some of the cons of the NACA program and why most people don't get qualified. So since NACA targets or markets to low to moderate income individuals, these individuals tend to have a lower than normal credit score. And the reason why they have a lower than normal credit score is going to be because of high credit to utilization on their credit report, or potentially even late payments and or collections. And so if you want to obtain a mortgage with NACA, unfortunately, they don't want to see any late payments within the last 24 months. They also want to see positive documented income for the past 24 months. What NACA strives to do is get you into their program so that you could iron out some of these details and make sure that you're ready for home ownership and make sure that you could qualify for a loan. For instance, one of the qualifications in order to obtain a NACA mortgage is that they want your housing payment to be 33% or less of your overall income. So let's just say if your new mortgage that you're looking to obtain is going to be $2,500, and that's going to be inclusive of your principal, interest, taxes, and insurance. So that $2,500 payment of your new mortgage payment would mean that you need to show $7,500 in income on a monthly basis, or let's go ahead and use my calculator, $7,500 times 12, you would need to show $90,000 in total annual income in order to qualify for a $2,500 monthly payment. And in order to qualify for that $2,500 monthly payment, you would need to show paper trail for at least 12 to 24 months of $7,500 being deposited into your bank account via a W-2 or a 1099 or cash deposits or check deposits from your clients if you're self-employed. And this is not just deposits of $7,500 for the past 30 days or even 3 months. This is again going to be deposits for the past 12 to 24 months. And this is why most people are not qualifying for the NACA program, because they're not showing paper trail for the past 12 to 24 months. And this is why you need to be set up with a counselor on the NACA program to get you ready for your new mortgage. So your housing payment needs to be less than 33% of your overall income, but also your consumer debt plus your housing payment needs to be less than 40% of your overall monthly and annual income. And your consumer debt is going to consist of your student loans, your personal loan payments, your car loan payments, your credit card payments, etc. And where most people are failing in the qualification process is that their projected housing payment plus their car payments and their credit card payments and other loan payments is exceeding that 40% threshold that NACA wants to see in order for you to get qualified for a mortgage. So here's an example. Let's just go ahead and say that your housing payment is going to be $2,500, but your car loan payment is $500 and your credit card payments are $500 minimum on a monthly basis. So $2,500 plus $1,000 is going to be $3,500. $3,500, divide that by $7,500, puts you at 46% debt to income ratio. Unfortunately, you will not qualify for the NACA program because you are exceeding their 40% maximum DTI ratio. So in this situation, what you would need to do is you would need to reduce your credit card payments and or reduce your purchase price of a home so that your housing payment could be less than $2,500, which would need to bring your overall debt to income ratio less than 40%. So in this situation alone, this is what causes NACA to be a con for most people, is because they're not meeting the income requirements needed in order to qualify for a NACA mortgage. Now, there are so many other cons with the NACA program, like payment shock qualification, or even being able to show documented income properly for the past 24 months, and so much more that I can't cover here in this video. So do me a favor, if you found this video helpful, let me know in the comment section below, or let me know by hitting that like button. And I want to hear from you on the next NACA video that I should produce. If you want me to specifically focus on the types of property that NACA will allow you to purchase, or if you want me to dive deep into the closing costs or the debt to income ratio or the income qualifications with the NACA program, let me know in the comment section below so that I can make a video specifically about that. All right, guys, if you're enjoying this straight to the point, no BS financial information, do me a favor and subscribe to the channel. And if you found this video helpful at any point, do me a favor and smash that like button so that YouTube knows that this is good content and can be shared and distributed to more people just like us. Thank you so much for watching this video. You are truly appreciated. I will see you on the next video. Peace.